Hey guys, and welcome back to Smart Money Minds. Do you guys ever buy a stock? It goes up a few percent and then you sell it and then the stock goes up another 10%? Or do you ever see a pattern and you're like, should I buy it? Should I not? And then you decide not to buy it and then it goes up 10%? And now you're dealing with all this regret saying, oh man, I shouldn't have sold so soon. I could have gotten so much more. And another thing is like, oh, I could have just bought it right there and now I'd be up 10%. So much regret and, looking back in the charts and thinking back and then like reminiscing on how I could have done things better. So in this video, I'm going to tell you exactly how I deal with the regrets of selling too soon or not buying when the pattern is right. And I'll give you two really good examples of two trades I made this last week of where this happened. After watching this video, you're going to know exactly what to do when these two scenarios come up next time when you're trading. The first thing we do is we sell too soon. So we buy a stock, it's up in the green a little bit, and then we're like, perfect. We're up 5%. I'm going to take my profits and I'm going to celebrate. And then it keeps going up and a little bit more up. And now it's up another 15%. And you're like, oh man, I missed out so much. So the solution for that, and it's been working for me very well, is what I do is I sell half at my target. So if it's up 5%, I go, okay, I'm going to sell half of the shares that I own. I'm going to set my stop at break even or a little bit lower so that at the end of the day, you have a winning trade regardless of what happens to the stock. By doing this, you let your shares, you give them an opportunity to develop and mature. So let's say I buy my shares at $100 and then I get to $105. I'm going to sell half of my shares. Then I'm going to let the other half run. And let's say it gets to $120. Then I'm going to sell another 30% of that half. So now I'm left with maybe 10% of my original shares, which I had. And I'm just going to let that go. I'm going to move my stop up along the way. And at the end of the day, if it stops out, great. If it gets to $150, you didn't miss out on that much. By doing this, there's no FOMO. You've sold half at your target and you've kept yourself in the game as the shares keep going up and up and up, and you have still skin in the game. So there's no FOMO when it goes up 50%. You're still in it, even though if it's just a little bit. So you're not missing out. I have a great example here of how I missed out on a really good move here on Chewy. So I actually bought in at 47.10 on this 15-minute higher low on Friday. Now, I saw that this was developing a falling wedge in this pattern, so I decided to get in a little bit here. And it basically started to go. Now, I saw that this move was moving up, but I didn't really love it. So I took all my shares and I basically got myself out really early, not even near 48. But because I took all my shares out at that time, I made a good, let's see here, about 1% move. But because I got myself completely out of it, I missed this entire move where I could have got 6-7% up to $50. And this is where I start feeling the FOMO. I'm regretting that I sold all my shares, and it doesn't have to be like that. And that's my own fault for not following my own rule. And I want to explain that to you right now so you don't fall into my trap. Another thing that happens commonly, at least for me and maybe for yourself, is that I move my stops too tight and I stop out too soon. So the solution to that is really just to trust your stop and to accept your loss before you actually lose. So if you really want to not lose as much, then you just have to use less risk, which is just having fewer shares. And my example of this is on Tesla on Thursday, where I made a short entry at 931 on this move here. So this gave a bull pennant move, this gave another bull pennant move, and now we're up here in this resistance line on the 4-hour time frame. As you see here, we have a falling wedge. Now, if you see here, what I did was I entered at 931 on this move down here. And what I did was I had my stop at 937, which was the high of day. And when I started to see this lower high, I actually moved my stop to break even at 931, and I stopped myself out for a break even play. But because of that, I missed out on a 4.5% move, because that's what Tesla did. Tesla continued to consolidate after this lower high, lower low, and the pattern played out exactly how I had it in mind. But because I didn't accept my loss before I lost, I got fearful and basically set my stop at break even too soon. And that's why I took a break even play. And these emotional things happen even to the best traders. Another thing that happens in trading is just in regret in not buying. So a lot of times when you're not buying a potential pattern and that develops and then it runs 10% and you're missing out on it, you looked at it, you're like, this looks decent, and then you miss out on the play because you didn't want to get into it. So now there's two solutions to this problem. The first one is, who cares? The stock market's going to be here tomorrow and you have the pattern correct. So trust yourself next time and go, hey, you know what? I got this pattern correct. I know what I'm doing. You just have to trust that you set your good risk to reward and you get in that play. There's no FOMO today because tomorrow I'm going to make the right play again. Now, solution B is you can evaluate why you didn't buy. Was it just not a good feeling? What's your R&R? Was the risk to reward, your stop level, too far? And next time, once again, you can always use fewer shares to test the water. And once it starts to move up in your direction, then you can add more shares into that trade and move your stop up along the way so that you are in the green. And this also allows you not to miss out on a good trade that you saw had good potential. Now, in the comments below, let me know if you ever ran into any of these emotional issues with regretting of not buying or selling too soon. And in the description below, I'll also put a link to my course, which is still for free for a very limited time. When that free promo runs out, it's going to be $120, but it's going to be worth it. Check it out below. And if you enjoy more videos, make sure you hit that like button, subscribe to my channel, and we'll see you guys next time.